Before we begin with today's market analysis, I would like to mention our new channel membership options. This is a special introductory offer which will open access to members-only trading strategy videos that are based on high-value, high-conviction investment strategies and are characterized by superior risk-to-reward metrics that target massive, market-beating returns over time. Please note, this is a limited time offering of just $9.99 per month, but members that sign up during this introductory period will be able to lock in this new low rate for the entire duration of the membership. Again, this early sign-up period will allow you to lock in this low introductory membership rate for life, and these new low introductory rates will only be made available for a limited time. Monthly membership prices will be going up after this short introductory period ends. With these comprehensive, members-only trading strategies, I only choose high-quality, high-conviction stocks that are easily accessible, with relatively low share price values that are designed for easy trade positioning, and combined long-term trading gains are expected to far outperform the monthly membership rate of just $9.99 per month. Join now to lock in your low introductory rate and start trading stocks with the pros. Now back to the video. Here we have the hourly price chart for Microsoft Corporation, stock ticker MSFT. So as we can see here, overall the stock has traded under a fair bit of selling pressure for the last 2 weeks. We did see a little bit of a bounce into the Friday close, but this is not much of a bounce. So we will need to sort of take stock of the situation here, sort of zoom in and identify some important support and resistance levels that could be used for new trading strategies going forward. So, if we kind of move in here a bit, we can see that prices have fallen to near-term lows of, let's get an exact number here, 417.27 would have been the low from the July 26th trading session. We did see a bit of a bounce here from that area, and we did actually post highs of 428.93 before reversing. But we're talking about roughly a $10 price movement here, and we're already starting to see some red candle formations that suggest that some resistance could be present. So we just sort of zoom in here a little bit. We can take a look at the this Friday trading session here, and we can see that this stock price has found resistance at our predetermined level, which did come in at roughly 429. In addition to this, we can see that the declining 20-period exponential moving average it comes in contact with this area. So this is the hourly price chart. Each candle would represent a 1 hour trading period, and this yellow line here would indicate the 20 period EMA, exponential moving average. So it's essentially the 20 hour exponential moving average. And as we can see here, the share price did start to come into resistance in this area, just as we had previously identified based on our prior Fibonacci analysis. So to the top side, this really is the level to watch here. If we can see a break above 429, that would bring us back into this exponential moving average cluster, and that could support prices into next week. But there is a large amount of selling pressure that still remains present throughout the market, and this really does create some uncertain territory for anyone that's trading stocks or trading technology stocks in particular. We've seen some very significant declines in some of these names. Even the Mag 7 stocks are trading under a lot of pressure. So there is a lot of downside potential here that continues to exist for these stocks, even the more stable Mag 7 companies. As we can see here, the trading volume bar has sort of spiked in the upward direction. And this is a negative reading here. As we can see here, this is a red bar, and it does far outstrip the green bars that surround it. So overall, this does suggest that there are more sellers rather than buyers currently in the market. And this is being confirmed by the readings in the momentum indicator as measured by the relative strength index. That would be this purple line down here. As we can see here, there is a negative trend here. And this does suggest that there is bearish momentum that is currently influencing share prices. So, at the moment, we have found some support during the Friday trading session. And this would come in roughly just below 418. And as we can see here, this does match up fairly nicely with the 78.6% Fibonacci retracement of this dominant trend move, which currently comes in at 419. So, As we can see here, this is a fairly predictable support region, and we would expect, there to be some buying activity here. But this level does really need to hold in order to prevent more significant declines from occurring. So, to identify how exactly we arrived at this level, this 419 level, we can look back to these prior lows from May 31st, which would have come in just below 405, 404.87 would be the price low here. So as we can see here, then we can then extend this price move toward the all-time highs, which came in just below 470, roughly 469. So, as we can see here, this is the current dominant price move, this bull wave here that is currently most influencing share prices. And this is the move that we use to measure these Fibonacci levels. So, currently, we have bounced off of the 78.6% retracement, but this is a very critical level here because it's essentially the last line in the sand, so to speak, as far as the stock price performance is concerned, in terms of whether or not the stock will be retracing this entire this entire trending move. In other words, give back all of the gains that were seen previously. So we are currently finding support here, so that is encouraging. But at the moment, we do not want to see this 418, 419 level break because there are no further Fibonacci support zones that would be holding up the stock in advance of these levels that stretch back to May 31st, which came in below 405. So if we do see a break below here, this does sort of open the pathway or open the scope here to a sub 405 test. And that would be a fairly significant decline from here because it would mean declines of more than $20 per share. So this is a very important level to keep watching to the downside. As long as the indicator reading does remain negative, and as long as we continue to see upward spikes in trading volumes here, the outlook does have to remain at least defensive, if not outright bearish. The only reason it might not be outright bearish is because we have managed to find support at this 786 retracement level. However, as I said, if we do break below here, that really is a bearish event that would suggest much lower share price activity. To the top side, what we would really need to see in order to take pressure off of this bearish activity here would be first a break above this 429 level. But then that would really put us inside of this exponential moving average cluster. And we would really want to see prices break above there before we start to expect any further rallies to the top side. Currently, this blue line here is the 200 period exponential moving average, and this currently comes in just above 440. So we would really need to see a break above here in order to truly take pressure off of the downside. So here are some levels to watch. This is the current market analysis for Microsoft Corporation, stock ticker MSFT.